It's time to cheer up. Everybody's so worried about the economy and the stock market. I think now is a great time if you're a long-term investor to be looking at potential deals. So I'm going to be talking about the best stocks to buy now and hold forever. I actually have some money that I have not put to work in my IRA. I'm going to walk you through the process and the stocks that are on my radar. Let's get to it now. When you're looking for opportunity, often it's not when everything is at all-time highs. We are seeing some immense pressure in stocks. No better way to see that than looking at the big money index. Now, again, this measures the number of stocks that are getting bought with big volumes and also going down with big volumes. This is our estimation of what the institutions are doing. The cool thing is we've been oversold 2 times already this year. That is a rare occurrence. We just went overbought and now we're about to hit oversold. Look, it takes immense pain for us to get oversold, okay? Prior to this year, it was literally during the pandemic. Those can be amazing times to pick up great stocks. Also, you're hearing the term capitulation. Oh, it is definitely happening. Right here, this is looking at under the surface of the market, how many stocks are plunging as volumes are increasing, right? That means people are dumping stocks, they're fearful. If we just look over the past 6 months, we are definitely nearing some periods where usually stocks can bounce or at least stage a relief rally. You see it here, we're going through it right now. And last but not least, we're seeing it big time in ETFs. So if you're in bonds, if you're in stocks, it doesn't matter. They are throwing everything out with the bathwater, but this tends to be an amazing time to go shopping for stocks. It is ugly out there, the data is ugly, but we know, right, historically speaking, usually when there is a lot of pain, there could be some opportunity if you have a long investment time horizon. I'm talking many, many years. So as I'm thinking about what stocks I want to invest in, right, put my IRA to work, I want to look at 4 qualities for great companies. And number 1 is they need to pay a dividend and hopefully raise that dividend every single year, right? A dividend is just a share of profits that a company pays you for holding the shares, right? Who doesn't want to get paid, right? That usually means that the company is probably healthy and they generate a lot of cash flow. Number 2 is I want to see a company that has an easy to understand business, right? You don't want to get involved in a company that you can't really explain it to your mom. Sometimes the easiest to understand businesses, they are the best one. Number 3, we want to look at a long history of outperformance, right? You want to see a company that continues to gain year after year. Now, it doesn't mean they go up every single year, but they're usually growing their business, they're growing their profits, and they are rewarding shareholders with higher stock prices. Then lastly, I want to look at institutional support. And that's what makes MAPsignals super unique as we look at where we believe institutions are getting involved. And you know what? The best stocks, they tend to have a lot of institutional support over the years. So if you like this type of content, make sure to like and subscribe to our YouTube channel. It helps us out. Let's get into our stocks now. So the number 1 opportunity, I'm looking at SBUX. The stock is about $85, ticker is SBUX. I've held it for a number of years, been a great name over the long run. Let's look at the chart real quick. We know that it's been in a downtrend, seeing big selling. These red bars are when we believe institutions are getting out of the stock. And then we've got these green bars. Recently, the company came out, gave some pretty strong guidance of the years ahead. So we do want to see some of that institutional support. Over the longer run, though, going back to 2006, has the stock been in an uptrend? It definitely has. And we know that it's a high quality name, right? These blue bars are indicating that it scores very well fundamentally and also technically. So let's look at a couple of those numbers now. So I really like that the 1-year sales growth is 23.6%. That is very good. Double digits is what you want to see. The 1-year EPS growth estimate of 17% is outstanding, especially in this tape. If you're growing, that's a good thing. It does have an expensive forward PE, though, of 29 times. That is way more expensive than the market. But if we look back historically at its normal PE, it's right at 23.7, and that is in the lower area of where it's been over the last 5 years. So it might be relatively cheap. And then on technicals, 2 good scores. It's got a last buy signal that we saw September 14th, and it trades near its 12 week high. Let's keep going. The dividend yield right now is 2.3%. That's more than the market. 1-year dividend growth is 8.9%. The 5-year dividend growth is 96%. Last but not least, free cash flow of $6 billion. So do I think this is an opportunity? I do. Number 2 is a great company. This is Microsoft Corporation, ticker MSFT. The stock price is right around $237. I've also owned this one for years. It is a great company. But look, every single tech stock has really come under pressure this year. We're starting to see that recently with Microsoft. But look, let's look over the long term. We can see that there is a huge uptrend in this name, very much a high scoring name, dozens and dozens of blue. That's the stairway to heaven. Again, the gains don't come short term, they come over the long term. So let's look at some of these fundamentals. 1-year sales growth, 18%. 1-year EPS growth estimate, 18%. Again, if you're estimated to grow your earnings in this tape, that is huge. It's got a big profit margin of 36.7%, forward PE of 23 times. That is more than the market. But get this, it's historical PE, right? So looking backwards, 24.5. That is way in the lower bands. In fact, the last time we got near those levels was March of 2020 during the pandemic. Now, it's obviously getting dinged on technicals, right? You're getting poor across the board. Look, it's below its 50-day, 100-day, and 200-day moving average. So it's going to get a red score, but that means it could be an opportunity over the long run. So here's some other cool stats. It has 1-year dividend growth, 10.7%. It's got a dividend yield of 1.1%. 5-year dividend growth is 59%. It's got free cash flow of $65 billion. Looks like a long-term opportunity to me. Number 3, we're going to be looking at a stalwart, Home Depot, ticker HD. The stock price is right around $270. And look, if you're going to be doing some home improvements, renovations, probably going to Home Depot. This is a stock I've owned for a number of years. It's a great one. So late last year, just like everything was going up, Home Depot was as well. We're starting to see there's a lot of pain in the mortgage market, right? Rising interest rates. People are worried about Home Depot. Are people going to be shopping there with the frozen mortgage market? Stock has definitely been penalized, but whenever you look over the long run, right? Has this stock rewarded shareholders? It definitely has, and it's got those blue signals, so we know that it's historically a very healthy company. And check out some of these fundamentals, right? They have to make sense if you're going to be making an investment. It's got double-digit sales growth. It's got double-digit earnings growth on a 3-year basis, and they're expected to grow their EPS 4.7% this year. Now, it's got a forward PE of 16 times. That's pretty much in line with the market. If I look at its trailing PE, it's about 16.5. So it's right in line with the market as well. That is in the lower area of its historical PE over the past 5 years. And then again, it's just getting hurt technically, right? We've got 294 days since it made a new high, and the stock is below its 50, 100, and 200-day moving averages. But if that makes you sad, think about this. It's got a dividend yield of 2.7%. I look forward to that dividend every quarter, by the way. It's got 5-year dividend growth of 119%. And also it's got free cash flow, get this, of $14 billion. So this is high quality. I think this could still be a long-term winner. I might be adding to it. Keep going with quality. Number 4, we're going to be looking at Visa. So this is a financials company, big payments network, credit cards, you name it. Stock price is right around $180, and the ticker is V. Now, this is one of those names that has really come under a lot of pressure recently. Tons and tons of selling. But again, over the long run, this is one of the best names, high performing names, dozens and dozens of times where it has been highly ranked. It has really paid you to be a shareholder, and I've owned this name for a number of years. So here we go. Fundamentals, 1-year sales growth, 10%. EPS growth estimate, again, I want to highlight that 13.5%. So if you're growing in this tape or expected to grow, that is huge. Again, It's got a forward PE of 24 times. It is expensive, but if we look back, its PE trailing is 26.8, and that is only time it was lower than that in 5 years was definitely during March of 2020, the pandemic. And we can see over here the technicals, they speak for themselves. They are just poor across the board, right? People are worried the consumer's not going to have money to spend. They're not going to be using their credit cards as much, etc. And so they're getting dinged for a number of reasons. One, the stock is down 12% in a month. It's down 18% year to date, and it's got a very low relative strength number. But listen at these numbers before you get so sad about this stock. Free cash flow, 14.5 billion. That is awesome. Dividend yield, it's small. It's 0.8%, right? But get this, 5-year dividend growth, 127%. The 1-year dividend growth is 17%. I think that this is a great opportunity over the long run. Before we get to the number 5 stock, I just want to reiterate what we're looking for with great companies that you're investing for the long run, right? You want to be looking for dividend growth. You want to be looking for institutional support, and you also want to be looking for just a history of outperformance for the stock. Oh, and lastly, that it's an easy to understand business. All of these companies have those characteristics, which, by the way, if you want me to answer some of your questions or you have questions for me, drop me a line, send me an email, info@MAPsignals.com. You could put in the subject, Ask LD, and maybe I'll answer your question in my next video. And also, if you want to leave a comment on this video, feel free to do it. I want to hear from you guys. All right, let's get to the number 5 and last stock. Number 5, I'm looking at Domino's Pizza, ticker DPZ. The stock is right around $315 per share. Look, this is a name that I've owned for a number of years, considering adding more on this weakness. So look, they sell pizza. It's easy to understand, but Wall Street has been very sour on the name, and also just a lot of discretionary stocks. You can see all of that red. But if we zoom out, right, look over the long run, this stock has been one of the best performing names literally over a decade. And you can see that with these blue signals. The stock has been an institutional magnet. And look at these fundamentals and you'll see why. So 1 year and 3-year sales growth, both positive. 1-year EPS growth estimate is 18%. That is outstanding. It does have an elevated forward PE of just under 25 times. If we look at its trailing PE, it's at 24.5. That is very, very low for this stock over the past 5 years. So it might be some value here. And then if you look at the technicals, it is red across the board. But remember, if you're looking for a long-term opportunity, usually it's not when everybody's excited about a stock. Now get this, it's got free cash flow of $560 million. It's got a dividend yield of 1.4%, 1-year dividend growth of 18%, 5-year dividend growth of 141%. I think that this is an outstanding name to do some extra research on. So now you've seen my process of how I look for some long-term winning stocks. I do hold for a very long time. Who knows if I'll hold them forever, but I think all of these companies have some great characteristics. Remember to do your own research. I'd love to hear what types of stocks are on your radar in this global bear market. I will see you guys next time.